Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The markets right across the board were relatively whipsawed as the US dollar index, which measures the greenback strength against a basket of six major currencies, fell from 101.35 to 101.15, refreshing its 8-month low following the Fed meeting minutes that supported expectations for a September rate cut. The minutes showed a strong consensus against Fed officials for easing policy if conditions aligned with expectations. In other economic news, the Labour Department benchmark revision slashed 118,000 jobs from previously reported payroll figures for April 2023 to March 2024. This the largest cut since the global financial crisis. This suggests a weaker job market and economy than initially believed. Traders now anticipate a 50 basis point rate cut in September, which was up earlier from expectations of 25 basis points. With the Jackson Hole Economic Symposium starting Thursday, traders are eagerly awaiting Fed Chairman Jerome Powell's comments on Friday, which could steer furthermore towards a 50 basis point rate cut if he mentions more about the job market. So as we turn to the technicals, we can see the Australian dollar is a little bit whipsaw, but I still believe technically we're a little bit overbought, so the market's pulling back just a touch. May find support around 67.15 to around 66.70.80. But once completed, could see further gains and therefore look through 67.80 and on towards the region of 68 cents, or even getting as high as around 68.5. The euro now reaches its objective, which was at 111.45. Slightly extending that top side to 111.45.60 may see a potential pullback as profit taking may emerge due to the overbought conditions and a slightly overheated ADX. Nevertheless, if the dollar index does continue to fall, as it has displayed this week and now sits around 101.15, could see further weakness down to 100. That would easily put the market up towards 112 as a potential target and reassess from there. Any pullback? Well, it could be a little bit deep, but holding around 110.45.55. Very whipsaw price action for dollar yen, once again taking a challenge to the upside, failed. In light of how the market is performing now, I feel there is still further downside risk that could end up towards the region of 142, with any upside attempts likely to be limited around 146.5 to 147. A stellar performance when it comes to sterling, and now nearly claiming its broader target of 131 as the market still continues to show a display of strength. Any pullback likely to be limited around the region of 130.45 and seeing a short-term base around 129.80.85. Given the overbought conditions, traders should still continue to monitor technical signals and adjust their risk management strategies accordingly, just in case we see heavy profit taking if we do reach the topside target around 131.40. Wrapping up with commodities, the market was also a bit whipsawed as now the precious metal looks for direction. Given the fact the market is somewhat bullish as it holds around 2,500, that could extend on towards 2,550, and with the broader call towards the end of the year around $3,000 an ounce, any pullback is expected to be somewhat limited and may find support around 2,488 to 90. Another downward day when it comes to West Texas oil. As we can view, the market's heading closer towards its objective, which is seen around 68.70 to 69.40. Given the fact the market is still struggling, we may see a bounce from that region. So again, continue to monitor signals and also adjust your risk management accordingly. Even though the call is somewhat deeper than suggested, nevertheless, we could get a bounce off that 69 and retrace back towards $74 a barrel. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest report. I hope you enjoyed the great start to the day.